Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, the stocks you see on your screen will be the stocks that are featured in this week's video. And as a reminder, if there's a particular stock you're interested in, you can go right to it using the chapters feature on this video. All right, so let's take a look at the market. When we look at the S&P, we had kind of backed off that 500 level a bit, and then Thursday came. Starting off with a weaker than expected PMI services sector report. Now, remember, the PMI services sector has been the hot one with the labor market, et cetera. That's been a big concern for the Federal Reserve. But that number came in just a bit tamer than expectations, as you can see on the graphic on your screen. And while we're talking about economic data, we have a big week ahead of economic reports. We're going to get the PMI manufacturing survey, the Fed's favorite inflation indicator, the PCE, that could definitely move the markets, and the GDP. All of those basically could move the market. So I expect some volatility in the markets next week. All right, so back to the chart of the S&P. We had this big move up on Thursday on the back of that weaker than expected PMI services report, or was it Nvidia? We certainly can't go through this presentation without talking about Nvidia, and we'll get to the chart of Nvidia in just a second. But we gapped up above that 500 level. Now, the positive is that we broke above a little bit of resistance we were building in that 500 level. But then the gap above it, if you've watched any of these videos, you know I don't like the gap. So I wish we wouldn't have gapped here, but we did. So the question becomes, when does that gap get filled? Sooner or later? The gaps get filled most of the time, as you know, but sometimes it takes a while. Now, if we look at this and I add the moving averages on here, I wouldn't, the market, I talk about this all the time, rarely gives you the ideal scenario. But if we had just a little bit of a pullback, fill that gap, test that 500 level, see if it's support, and then bounce higher, I think that would be very constructive for the markets. That's the ideal scenario. The markets are going to do what the markets are going to do. We did get a little bit of follow through today on the top of yesterday's big move higher. So that's constructive for the markets to continue higher as well. But like I said, I think that we're going to have some fireworks next week. All right, before we go any further, let's go ahead and look at that chart of Nvidia. The big move, as you saw, stock that was priced for perfection, it moved to the downside. Now, I was watching this pullback, and I've got kind of a rule that I follow, that when a stock, similar to this, a volatile stock, trades down into earnings, oftentimes it'll move higher. And when it trades up into earnings, oftentimes it'll move lower on the earnings report. And I was looking at this about buying some calls on Nvidia, but the normal movement on Nvidia that's priced into the option prices is about a 7% move. In this case, it was 10% was priced in to the options, and I thought that's about what we were going to get. And then when Nvidia opened, and thought, I'm a hero because it only gapped up 6%, but then it continued to run throughout the day, and as you can see, closed on the high. Today, we had a little bit of follow through on Nvidia, but we gave some of that back towards the end of the day, and that's understandable as well because we got a little too vertical here. Too much separation from the 10-day moving average. You all know the rule. No security in any time frame gets too far away from the 10-day moving average. But you just got to keep tipping your hat to Nvidia. And if you happen to listen to the earnings conference call afterwards, the CEO was about as giddy as somebody could be. Nvidia is just doing everything right. I don't think we're done going to the upside. Maybe we do a little backing and filling first before continuing higher. But we'll wait and see. So some of the things that we normally look at, the dollar, I think, is a little bit worrisome here. We kind of moved down on that PMI report that came out, perhaps thinking that maybe we were going to get a Fed cut sooner rather than later if one of the hotter areas for inflation was calming. But then the dollar rallied back and it traded dead sideways today. So we're sitting right here at this area of 104, which is support resistance for the dollar. If we see the dollar go too much higher, we're going to start to affect earnings reports from global companies. We know it's a global economy now, and the exchange rate is going to affect their earnings reports. So we need to keep an eye on this dollar and see what happens around this 104 level. If we start to move to the downside, It's kind of hard to believe that we don't move lower in the dollar with all the debt that we're issuing. We had a 20-year auction that Rick Santelli of CNBC gave a D rating to as well. And if you wonder what that means, when he rates them from A to F, basically just like when you were in school, a lower rating like that means that the bid to cover was lower. There are less people wanting to acquire our debt, and that means rates need to go up. So we're not going to look at the TNX. We had a request to look at the TLT, so we'll look at that here a little bit later on. But the dollar, I think we need to keep an eye on this to see if we rebound, continue higher, or if we start to roll over. That's going to be a little bit of a telltale sign, I think, on what the Fed's going to do. Looking at the VIX, we had this move up and then right back down. We gapped down yesterday, as you would imagine. I was actually kind of surprised that the VIX didn't go a little bit lower with the strength of the rally that we had yesterday. Just a little bit of a tick down on the VIX as we look at the chart. Something interesting here, if we just draw a line just right through the middle of where we're going, you can see that we're building kind of this upward trend of the VIX. And I was asked last night in our Elliott Wave Options Insiders meeting, that's for subscribers only at ewotrader.com. And we were talking about this, and someone asked, where do you think the market goes the rest of the year? And I'm like, well, I don't have that kind of a crystal ball. But one of the things that I do think, and based on this trending move to the upside, I do think the rest of the year is going to be a bit more volatile, whether you believe the election is a bullish time of year, election year, or if stocks have just run too far too fast. What's the Fed going to do? All these things. I just think that this is a trend that's going to continue. We're going to bounce back and forth on the VIX, I think. But in general, I think we're going to have a little higher volatility going into the end of the year than we had last year, for sure. Looking at some of our other markets, looking at the Dow, the chart's going to be very similar here, rallying to the upside. Not quite as big of a gap to the upside here on the DIA. I think that makes sense as well. We've talked about this before, that towards the end of the year, clearly there was a rotation into the Dow based on this move. A lot of people wondering if we were going to have some recessionary pressures, et cetera, in the first quarter of the year. And money moved. Money's always moving. Rotation always occurs in the markets. But I think that's a pretty clear sign that some money went into the Dow. They're still doing okay because it's drifting to the upside, maybe not at the velocity that we're seeing on the S&P or the Qs, but still moving to the upside, and a pretty constructive looking chart there. Speaking of the Qs, if we take a look at the chart of the Qs, one of the things that I was really interested to see today was if we traded above that 440 level, would the wave 5 move over where it had hit back on the 12th of February, or would this 5 relabel to a 3? As a reminder, the Qs are in a wave 5, but the S&P is labeled a wave 3 along with the other markets. So that's going to be something that we watch next week to see what happens here. We are at 100% extension, so we could roll over and head back down towards that previous 4, or this 5 could relabel. One of those two things is going to happen the next week on the Qs. A little bit of a pullback today. That's kind of just constructive. We'd gotten a little bit above this gap here and a little above the 10-day moving average on the high. But I was just really interested to see what happened here. And that 5 just moved over on the new high, at least during the trading day on the Qs. Looking at the IWM, we're getting some consolidation here in the small caps. We do have a wave 4 labeled here. We look like we're moving into the wave 5. It won't label the wave 5. And by the way, from time to time, you all mention, I don't agree with where you put your Elliott Wave labels. And I just want to remind you, this software is from the Hub organization, hubb.com. As the best Elliott Wave software out there, I think. That's just my opinion, but I'm a big Elliott Wave fan, been trading this since 2001. I'm going to use the best software that I think that's out there. But it's priced or coded exactly to the algorithm as Ralph Nelson Elliott himself wrote it. There's other software programs that have personal adaptations of Elliott Wave, but this is exactly to the algorithm that Nelson wrote. So they're not my labels. I'm just doing my best to analyze the charts as I see them, but I'm not placing these labels. The algorithm is. And this wave 5 will not label until we take out this wave 3 high. Then we have a confirmed wave 5. Right now, we bumped our head against 205. So are we back in that range between 190 and 210? Can we break above 205 and go to 210? As I said, we have a little bit of consolidation here Not the best triangle in the world, that's for sure, but certainly you can see a little bit of consolidation here right in the middle of it, around 200. So are we going to break down and test 190 again, or are we going to break up and go to 210? One of those two things is very likely to happen in the IWM next week, I would think. All right, and as we start to look at some stocks of interest, as you know, I read every one of these comments. I answer as many of them as I can. And just as a reminder, each month this year, we're giving away one of our level 3 subscriptions. That's our volatility strategy, which is triangle breakout, our time strategy, which is AI-infused stocks that are expected to stay in a trading range, and our newly infused impulse strategy, which is directional trading strategies. We're several $1,000s, and all you have to do to enter is leave a comment. So we'd love to have you join us in the drawing. And by the way, we talk about the markets each and every week on Tuesday night during the Trade Finder. One of you guys asked about the ASX, and every week during Trade Finder, I cover the Aussie market. We have a lot of Australian viewers, a lot of Australian subscribers. So if you'd like to join us and you haven't, you can see the link on your screen. It's free. We talk the markets. We look for trade ideas, and we have a live Q&A. We have a great community. They enjoy interacting together, and we'd love to have you join us next week during Trade Finder. All right, so we won't be doing the ASX today because we do that every week at Trade Finder. But other stocks of interest that you all have put in the comments, ARM, and boy, I don't like the vertical moves, and that's about as vertical as it gets to the upside there. You know what I say, what goes vertically up oftentimes comes vertically back down, and it did. So we had this big move up, and then that was followed by a 29-point, almost 20% move to the downside. However, if you like this stock, it is going through a pretty nice consolidation here following that big gap up and run. That's what you want to see for the stock to perhaps an upward move. It did give some back, so we handled that part of the vertical move. We're consolidating nicely, and perhaps we catch a bid here and break out of this triangle. If we break down, you can see where the wave 4 is set up. And again, the software labels these as projections. It does not mean the wave 4 is underway. It means that if the wave 4 is labeled, this is about where you could expect it to find support, and then on to the wave 5. So these projections move based on the wave 3 movement. So when a stock's in a wave 3, these are just projections of what could happen once the wave 3 ends. So if it breaks to the downside, we probably label this 4 right into this projection box. If we break to the upside, maybe we go up and test that high. Oftentimes when we get these big bars like this and then we correct, we go back up and at least test that high. So I would expect to see ARM go up at some point in time and test that 160 level again. BN was another one that was asked. This is a really interesting pattern here. It did label the 5 because we took out that 3, at least intraday. We didn't close above the wave 3. So that 41 level is acting as some stubborn resistance. But look at this ascending triangle pattern that we have here. So we're about to get a breakout on BN. With the wave 5 already labeled, it could break either way. And I talk about this in triangles all the time. I look for any sort of triangles, kind of how I made my name in the world of options. I created a strategy based around strangles where you get the best delta gamma relationship. It's not a standard strangle, it's an adaptation of it. And I can tell you with all my research, ascending, descending, or symmetrical triangles can break either way, regardless of what else you read out there. So an ascending triangle, it may very well break to the upside and take off. But it could just as easily break to the downside. But once again, another stock that we'd expect to see some movement in next is BN. TLT, so we didn't do the T. So we're going to look at the 20-year now. The TNX is rates. TLT is pricing. So when prices go down, yields and rates go up. They move in an inverse relationship. And we have a really nice zigzag set up here. So I was happy to see this one ask about, because I always like talking about zigzags, and we had a great retracement here, and then we're right down to the 100% extension, and then we bounced up in prices today. Yields went down a little bit, as you would expect. Kind of a surprise that maybe we didn't get more of a move to the upside out of the NASDAQ, but perhaps it's just so big of a gap yesterday that it couldn't follow through. But normally when rates go down, you see that kind of a move. Now, the wave 4 here on the TLT is right at a 50% correction. So if we do start to see prices move up towards this wave 5 target, then that's line rates are going down. That'll be for the market as well, as perhaps the PCE comes in a little tamer next week and we start talking about Fed rate cuts again. That could very well play out. But a 50% retracement is a good solid level for this to bounce and move higher on prices if it wants to do that. Another stock you all asked about was CrowdStrike. And gosh, if you saw the chart of PANW, Palo Alto, you're probably a little nervous going into earnings here on CrowdStrike, and I would be as well. We did have a nice little corrective move here, and that was on the back of the PAN report and then moving back to the upside here. But the earnings for CrowdStrike are coming out here on March 5th, and I think I just have to sit on my hands on this one. It's had one heck of a wave 3 run through here, and it's probably ripe for a pullback. Now, Palo Alto did have a little bit of a bounce back today, but I'd be nervous on CrowdStrike if I was long going into that earnings report. Same sector, different company, obviously, but something that could follow through with a little bit of a retracement here, just like PANW did. Also want to talk about the USO. We get asked about that a lot. And so far, the consolidation is just staying right here underneath this 75 level. That's key. You can see how it's acting as resistance. We have a zigzag pattern here as well in the USO. I'm just surprised there hasn't been more saber rattling coming out of OPEC, but so far they've stayed fairly quiet. And if we can't break above 75, then we could see the USO roll over. We could see oil roll over. But a break above 75 and we could be off to the races. And with the type of cars I drive, that's not fun at the gas pump. So I'm a motorhead and I like the big V8s. And so I don't like seeing high gas prices. But for USO to really catch a bid, it's got to find a way to break above 75. Other than that, it just seems to be channeling through here. But the C-wave extension would get us above 75, and then we could look for maybe 161.8% extension. But as I said, we've got to get above 75 first. Now, we looked at Bitcoin, talked a lot about it on the live show over on the Hub Financial channel. For those of you that are watching, if you haven't, go over to the Hub Financial channel here on YouTube, subscribe there. We talk the markets. We do a live show every Friday at 2 p.m. Eastern time. We talk a lot of cryptos and Bitcoin, etc. So please go over there and register and join us on Fridays. This consolidation here is kind of what you would want to see after this big run to the upside. As long as we stay above this 48,000 level on Bitcoin, I think you have to stay positive. There's a lot of big projections on where Bitcoin could go. So we ran up, we hit the 61.8% fib extension. Obviously would act as resistance, which it has. So we're consolidating here in the 51, 52,000 range. But again, even a test down to 48,000, I don't think ends the Bitcoin story as we're moving into the halving. We've talked about it on April 18th, and there's some calls for in the 60,000s before then and 80,000 by the end of the year. With a lot of information behind it. So if you're interested in the crypto world or Bitcoin itself, that live show on Fridays on the Hub Financial channel is a great place to go. I also wanted to show Coinbase. We talk about that a lot. I think this one's quite interesting here, and you might be able to look right here for an opportunity in that world. We've held 160, and if we continue to hold 160, that could be ripe for a bounce back to the upside, perhaps extend that wave 5 up to the projected level, up to 220 there on Coinbase. So we got a little vertical for my taste, but we corrected that a bit. We held at a point where it needed to hold. So I think Coinbase looks pretty interesting right now as far as a potential continued move to the upside. And we'll finish off this week, as we do each and every week, with the NVDA. Just keeps on motoring ahead. It doesn't seem to be anything that can stop the INDA right now. There's a lot of people out there saying, be careful, it's priced for perfection, et cetera, and all it does is continue to go up, and it's moving up the way you would like it to move, right along that 45-degree angle. That's good accumulation. There's a lot of money moving in to this market, whether it's the INDA or the Nifty. We are at a wave 5, but it's only a 44% extension. Now, the interesting thing on the INDA is the wave 4 is only a 23% correction. So it hit that first fib level at 23.6. And if you read the works or the writings of Elliott, he acknowledged that that's a fib level. And so that's why the algorithm will label it here. But he also said that oftentimes, even though it looks like that might have been a wave 4 correction, when you continue to the upside, sometimes this entire pattern relabels, and that 5 could relabel to a 3. We'll find out soon because we are in that wave 5 projection. So the Elliott Wave algorithm has nailed this INDA so far, gone right exactly where it's supposed to go. Now, does it get tired? Are the naysayers right? And we need a little bit of a correction here back towards this 4, back into the 49 area? Or are we going to continue higher on the INDA and this all relabels into a big wave 3? That'll be something to watch over the coming weeks as well. As always, I hope you found this informative. Hope you have a terrific weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.